The last week has been a volatile one, with central bank outlooks the key focus in Australia and abroad. Bond yields have been the clear driver of market movements as bond yields moved higher and equity prices lower as investors reassess their outlook for central banks and the continuation of the extraordinary support we've seen over recent years. In Australia, our week started with retail sales, up 0.6% for the month of May. Overall, this was a positive update. There were some influences from food, prices, weather disruptions, but looking on a state-by-state basis and looking at the underlying non-food retailing data, this was actually a pretty positive update for the Australian consumer. The next big domestic event was the Rba decision. The Governor's statement really repeated some previous themes. Whilst there's some positive data flowing through, there was really no need for the RBA to change their outlook and become more positive on the economy. They also, regarding the currency, did continue their line that an appreciating exchange rate could complicate the adjustment. We saw the currency fall almost a cent after that announcement, certainly as the market had sort of been thinking that the RBA could join this more positive outlook from other central banks. And so market pricing remains a small chance of a hike, about 10% towards the end of the year. We also received an update from the US Federal Reserve this week with the publishing of their June minutes. Here we saw members continue to be optimistic the US outlook, although some of the weakness in inflation they are describing as transitory. And the Fed really continues to outline an optimistic path and one that will continue to see gradual tightening of US monetary policy. Interestingly though, the committee did have some nuances and perhaps some concern regarding the longer term outlook, with factors in Washington certainly weighing more heavily on their thinking. Markets continue to price a further Fed hike at about 50-50 this year. The other major bank, the ECB, also released their minutes. Here, members also outlined a more positive outlook, and certainly markets believe that further stimulus will be wound back. Australian trade data has been impacted by weather disruptions, and this week we saw an update for the month of May. Here we saw a surplus of $2.5 billion as coal exports rebounded following the impacts of Cyclone Debbie, which had occurred earlier in the year. Certainly the month-to-month volatility is to be expected, but it does look like net exports are going to make a more positive contribution to the Australian economy as we go through the year, after there had been a drag through to weather disruption in the first quarter. The Australian dollar has actually been the weakest major currency this week, as the RBA's determined neutrality really stood out amongst this more positive outlook from other central banks. We do have the G20 meeting coming up, which is sure to provide plenty of headline risk. And then for Australia, next week, we see important updates on business and consumer confidence. We also have home loans data, which will be important given the regulator's attempts to slow growth in interest-only and investor loans. For the Australian dollar, we expect a 75 to 76.50 range to capture trade for the week ahead. And we look forward to talking to you next week and providing another update.